The Dow up about, well, 76 points is where we settle in. The S&P and the NASDAQ also in the green today. Doug Flynn is with us, certified financial planner, co-founder of Flynn Zito, and he's here in studio. He's a real person, so that's good to see you. Thanks for coming in.
Great to be here.
All the way from Long Island, straight out of Long Island, as they say. All right, Jay Powell today, the Fed chairman, there's the headline. The market went up a little bit. Jerome Powell wants more proof inflation is falling before cutting rates, is that headline, but the fact is, he did kind of tell us that, you know, rates will come down here at some point, right?
Yes, they're not ready to do it yet, and he definitely said that today. So I think the higher for longer is out there.
Right.
But rates are going to come down. He said as soon as the signs point to that, they'll do it. They're going to move aggressively to do it. It's just not going to happen as soon as everybody wanted to. So maybe it's in the latter part of this year.
It's the timing. There's a quote from Powell. Reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen in inflation. Ultimately, it would require tighter policy to get inflation back to 2%. So that's always been that juggling act of, you know, you want to do it, but you don't want to.
They do not want to reverse course and have to raise after after cutting. So they're going to wait till probably a little longer than you'd want them to. But when they do, then they'll start to. And they want to be careful about the political impact later in the year when we get close to the elections. So if they haven't started by then, that's going to be interesting to see how that plays out.
Which I actually want to talk to you a little bit about today. But real quick on Powell, do you think he's handled this pretty well, given the cards he was been dealt, or what would you say?
Yeah, I think everyone believes that he's done a really good job and probably better than anyone thought that he would. So, you know, achieving that soft landing is what they keep saying that you want to do, and that's kind of keeping employment where it is, and then getting the interest rates and inflation under control. So, so far, so good, and we'll see if they can land it fully 100%. Yeah,
it's always tough, again, to get the timing right. I said I wanted to talk to you about politics, which we'll usually allow you to skate by without forcing you to talk politics. But today on the show, we're having this kind of wider conversation, since you're here in person and everything else, about the general election, because we know it now, right? Here's the headline. It's a U.S. News & World Report headline, I believe. New York Times headline. Wall Street's already placing bets on the Biden-Trump rematch. Traders and strategists thinking about the ways the election could alter the mood. So what would you say? What type of bets are being placed here, Trump versus Biden? Because it's not a normal election, as we know. There's a lot of other factors going into it where it's like, oh, Republicans, good for the economy.
Right.
Democrats going to have higher taxes. I think there's more to it this time. But what's the bets on Wall Street?
Well, I think that's still there. I think you have the bets are that Trump would be more of a pro-business type of environment for business, and Biden not so much. So I think that's a little bit of backdrop, and I do see that just talking to money managers. We had some meetings today in the city. That's why we're here.
Okay.
And listening to them and moving some money towards a direction that the likelihood of Trump being reelected has sort of increased to their effect, and these are people that are completely on the left or in the middle, and so that's interesting to see them start to shift money in that direction.
So that brings up really the point we should have brought up at the beginning, which is interesting. Anytime you talk about Wall Street and elections, sure, people have personal beliefs, but at the end of the day, they are going to bet on what they think will happen rather than what they want to happen. And I think now, with the way the parties have shifted, that's why I thought it was maybe the different election. There are a lot of either centrist or liberal folks on Wall Street. They live in New York and other places. But if they think Trump's going to win, they're going to make that bet.
They're going to put their. I mean, some of the things that you think about is like in the energy space.
Okay.
Right. Different energy companies will perform differently under different administrations based on the policy. So there's things like that. I don't think it changes the big picture. I think the country and the economy is bigger than any one person who's up there. And personally, people might want a certain result, but their money is going to go to where they think they're going to get the best benefit from. And whether that's interest rates or less regulation, pro-business, that's going to lean into that. Versus being a little more restrictive. You might do different things with your money accordingly.
We have a screen. We have two screens, actually. I'll put them up. So let's see what you think of this. You've said some of this already, but what Biden might mean for Wall Street, and then we'll go to Trump afterwards. This was the U.S. News & World Report. So Biden, possible corporate tax increase, potential rise in government spending, growth for clean energy stocks. So, you know, you do get benefits from some of this if you shift to a different type of economy. What about a Trump win? What would a Trump win mean, just in a practical way? Lower taxes, maybe that helps the stock market, rise in bond yields. I don't know if you agree or disagree with that, and fears of a revived trade battle with China, which I also think never went away necessarily. No. I was talking about this last hour. I mean, Biden and Trump are not that different on China.
They're not. I think the tax policy is interesting because we do have the current Trump tax cuts that expire at the end of 2025. Biden would let those expire and let tax rates go up. That's what a lot of this is referring to. And theoretically, Trump would have those extended. And so maybe you'd have lower taxes for longer, and that's a plus to the people and having that extra money. So there's that as a backdrop of which way it goes. You can get to the end result of keeping the economy growing in different ways. It's just which way are we going to get there? Which one is better? You can just invest accordingly to which way you think it's going to go. Right. But obviously, lower taxes are better for the people. That doesn't do well for the deficit in the short run, but maybe in the long run, it does.
This was fun having you in studio.
Great to be here.
You said you were here already for meetings, right? So we didn't pay for a car service or anything.
No, not today. No, maybe next time.
Thank you, Doug. Doug Flynn, we'll see him on the show all the time, but now we see him in person. Good to have you on, and now...